for business people.
Hello and welcome to Bloomberg Quint Live, and you're watching Trend Spotting. I'm Navneet Saluja D'Souza.
Hi Navneet, I'm Agam Vakil, and in the next 30 minutes we deep dive into specific trends in the markets to draw out key takeaways and its implications for investors. First, the headlines. Both benchmark indices trade with marginal gains, broader markets outperform. And pharma stocks gain in trade today as Sun Pharma, Dr. Reddy's and Lupin's among the top nifty gainers in today's day of trade. Crude prices touch a 2-year high after a blast at a Libyan pipeline disrupts supply to the country's largest export terminal. And Jairam Thakur will be sworn in as the Chief Minister of Himachal Pradesh in the ceremony later today.
All right, let's take a look as to what's happening with the markets. Remember, tomorrow is the day when the December series expire, but it's a muted trading session, so to call it, at least for the benchmarks. But the good news is that we've been touching fresh highs almost every day. Today also, Nifty as well as Sensex, they touched their fresh highs. So Nifty still trading in the positive territory at about 10,537, 67 points gain seen for Sensex. Bank Nifty is seeing a bit of pressure, so it's off day's high actually. It did scale above the level of 25,700 in today's session, but currently Bank Nifty trades around the mark of 25,654. But the day belongs to the pharma space, which has underperformed 2017, but at least today the pharma stocks are doing pretty well. The Nifty Pharma Index is your top sectoral gainer, it's up almost 2.5%, and you've got stocks like Sun Pharma, Divi's Laboratories, Glenmark, Dr. Reddy's, which are the constituents of this index, are doing pretty well. The broader markets, they continue to outperform. The market breadth is pretty positive. It is in favor of the advances on National Stock Exchange. Last when I checked, the advance decline ratio is almost about 3:2. So that's pretty much good news because we're still seeing more of positive trades in today's session. Let's just quickly pull up the Nifty contributors chart and see which are the stocks which are contributing the most. Well, the list is dominated by the pharma counters. So Sun Pharma, Dr. Reddy's are there, and HUL and SPI are also trading in the positive territory. What's capping the moves in the upside? ICICI Bank, TCS, ITC and HDFC Bank are not doing too good. But the broader markets are doing pretty well. Any specific stocks which are doing well?
Sure, Navneet, no prizes for guessing. I am going to talk about Reliance Communications because we're looking at a move another 20%. It's currently trading just shy of the 26 rupee mark, and we've seen some substantial gains coming in ever since the press conference yesterday. But with that, we have seen good gains in Wockhardt as well, which has moved up as much as 7%. Of course, Navneet, you mentioned about the pharmaceutical space, and Wockhardt is one of them, which is also extending its gains on the back of gains in the sector overall. We have Hindustan Copper, which is also up 6%. Rallis India, along with Varun Beverages, and TV Today Networks is another counter which did see some profit taking yesterday, but TV Today Networks is now once again up nearly 5% and well above the mark around 460. So that stock also doing very well in today's day of trade. Well, one regular that continues to show up in the counters that are looking at losses is Bombay Rayon Fashion, hitting another 5% lower circuit in today's day of trade. Very, very little in terms for volumes, but that is because of the fact that it is locked in a lower circuit. We have DB Realty down 4%, and DB Realty, of course, saw a lot of up move, and we're looking at once again a little bit of profit taking. Intellect Design Arena, Time Technoplast, and Naveen Fluorine among some other counters which are losing out on trade to a certain extent. But on the whole, when it comes to the broader markets, Navneet, and I'm talking about the Nifty 500 as well, we have about 3 gainers as against 2 losers.
Okay, so good day of trade, but on trend spotting today, we put the focus on what is making Sanghi Industries, in fact, brokerage is being positive on Sanghi Industries, as we'll connect with the whole-time director of the company, Beena Engineer. We discuss the trends in the infra space and the top bets there as we connect with Rohit Natarajan of IDBI Capital, and we put the spotlight on the recent order win in Welspun Corp as we connect with the MD and CEO of the company, Mr. Vipul Mathur. All right, then moving on to our first trend of the day. 2017 is almost over, and we are looking at the outperformers this year. And today on our list is Sanghi Industries. The counter has been registering strong gains in trade today and has hit fresh life highs. It has given you returns of 180% this year. In fact, Motilal Oswal too has come out with a report. They have initiated coverage on the counter with a buy rating, and if you look at the target price they have given is almost 157. So what's making the brokerage is positive on this counter, and what does the road ahead for the company look like? But to answer all these questions, joining us on the phone line now is the whole-time director, Bina Engineer, and in a while we'll also be joined by our colleague Nikki Mirchandani, who tracks this sector pretty closely. Ma'am, good morning to you and compliments of the season. Thanks a lot for joining us today on Bloomberg Quint.
Good morning to you, and happy festivals to you also.
All right, ma'am, I'm sure you would have read the report which Motilal Oswal has come out with. They've given it a target price of 157. You've had a great year, so to call it, in terms of at least the stock price movement. You've also guided for, doubling the capacity from 4 million ton to almost 8 million ton. What I want to understand is what's the status of that expansion plan? I think in an earlier interview to Bloomberg Quint, you highlighted you will require almost 1,100 to 1,200 crore for your expansion plan. How are you looking to raise those funds? When will that added capacity go on board?
So, yes, the expansion from 4 to 8 million has been on cards for quite some time, and we have spoken about that. And we have all the resources such as the limestone, the mines, and the fuel availability, etc. for that. We are currently evaluating the plans, the financial plans for the same, and it would clearly be a mix of debt and internal accruals, etc., which will go towards the project. The cost is estimated at around 1,250 crores as per our current estimate. But as I said, we are evaluating and we'll firm up the plans and we'll come back to the investor community at large in due course.
Okay, we do also have our colleague Nikki Mirchandani joining us here with us. But ma'am, I have a question as well, and this is in terms of diversification. And from what I understand, a majority of your volumes come from Gujarat. Now, this specific report that we were going through mentions that you are looking to diversify into other markets. Can you tell us a little more about what geographies would that be, and what could that entail with respect to volumes, at least in the initial phase?
We are one of the very few coast-based plants which allows us access to different markets. Historically, about 85-90% of volume has come from Gujarat, which is our core and home market. But by investing additionally in our port as well as in the receiving terminals near Mumbai and around we have also invested in the bulk cement carriers. And therefore, the entire chain for the coastal delivery to Mumbai and the surrounding market has now been commissioned. And therefore, it now gives us an opportunity to sell in Mumbai. The shift or the addition of the Mumbai volume would only be gradual. The idea is not to dump the market here. And it will only be gradual over a year, by when we should reach our optimum capacity for the first year. So the ships have been commissioned only in the month of October. So we are in the early stage of using this coastal channel.
Hi Veena, this is Nikki here. I do understand that power and fuel cost of the company is the lowest in the industry that we have. But then relatively we are seeing a higher freight cost as compared to that of its peers. I believe you've also commissioned 2 new coastal terminals to take care of the incremental freight cost that we're looking at as compared to the industry. Could you help us understand how will that augment going forward?
So you are right that we are slightly on the higher side so far as our freight costs are concerned, and so far as Gujarat is concerned, that geography will always have to be serviced by road, and therefore the road cost will continue to be on the slightly higher side, because we are at the extreme end of the western coast, and that makes that additional about 150-200 kilometer distance is extra compared to the other players from the market. So far as Gujarat is concerned, I do not see any significant change in our freight cost. What has changed in last few months is, as you acknowledge, that there are 2 bulk carriers which have been commissioned, the sea terminals have been commissioned, and therefore now there is a larger volume which can be delivered to Mumbai in an efficient manner and at a similar cost that we are incurring in Gujarat. And therefore what we perceive is that without incurring additional freight costs, we have opened up the Mumbai and the surrounding market for ourselves, and we can service that market at similar cost. So there is no incremental freight cost for going to the further geography.
All right. Also, we just mentioned that the company plans to double the capacity from 4.1 MT to 8.2 MT by FY20. What kind of incremental EBITDA would be looking at with this kind of capacity addition that will go on stream, and also how will the utilization play out going forward with this kind of capacity addition?
So as I said, we are evaluating these plants internally, and as soon as we firm up, we can make comments on that. And therefore, I don't think it would be appropriate to make comments on the EBITDA projections, etc. at this stage.
Ma'am, the Motilal Oswal report also suggests that they expect your margins to be increased by another 8%. I'm not asking you to give any sort of guidance here. You did almost EBITDA per ton of 1,000 rupees in the previous quarter. Could you just tell us how is the second quarter looking for you? And let's say in the next 3 years, where do you see the margins heading for the company, considering there'll be new capacity which will come on board? You're also going to tap newer geographies. You are looking at Maharashtra market right now.
Right. Again, what we as a company can control is our cost, and we have by far been amongst the lowest so far as the manufacturing cost and even the delivered cost across the industry is concerned. The margins would only is the function of the difference between the cost and the realization, where cost we can control, but realizations are not in our control. And therefore, I don't want to make comment on what margins we can achieve, but what I perceive is that, yes, we are moving into a more remunerative geography, because typically the Mumbai and the surrounding market prices are better than Gujarat. But that will still form a small part of our sales, and it's not that the Gujarat volume will shift here, but that additional volume as well as the comparatively better prices which generally prevail in Mumbai and surrounding areas will definitely help the company.
All right, ma'am, I have a last question for you, at least from my end. I'd like to understand about the demand and the pricing scenario, because I do understand there are a couple of upcoming road projects in Gujarat. So can we expect the pricing of the region to improve going forward, and also thereafter the company taking a price hike in terms of their products? Is that a likelihood?
So if you see about last 3 months trend, the Western sector has sustained the price growth which they had achieved from the bottom of about say 4,300 last year, January, February, or then early part of this year. From that, we have already seen a good price improvement, and now the prices are stable with minor fluctuations. And so I'm not able to comment on the price hike, but I believe that the prices are stable and good at current rate. Besides that, yes, we do see that the dust has settled in Gujarat, and now probably the new regime would take up more efforts and more infrastructure projects and the implementation of the road, metros, airports, smart cities, etc., which has always been on cards. But probably last couple of months, the focus might have shifted or might have diluted a bit with the elections, etc. But the dust has settled, new government has taken over yesterday. And therefore, we believe that effort will continue to boost the infrastructure spend and therefore the cement demand.
Okay, ma'am, we'll leave it at that. Thanks for joining us and giving us an outlook on your company. And of course, we will be watching out for more developments with respect to Sanghi Industries. That stock's done very well. As you can see there, we've seen about a 45% growth on a 3-month basis. And on a 12-month basis, it's a staggering 172%. So it's certainly turned out to be a multi-bagger for whoever has been invested in this company for a while now. But that said, we'll move on to the next theme. And in 2017 has been the year of reforms, be it demonetization, aftermath, or GST or RERA. And the infra space did see a hit overall. Is the worst over for the sector, or do we have more pain coming for the sector? Let's get an analyst's view on this. And we're once again, in conversation with Rohit Natarajan, the research analyst at IDBI Capital, who tracks the sector very closely. And of course, Nikki is also here with us to, decode some of the trends that are going on in the sector. But the real point of having this conversation, of course, is to know whether or not there are more opportunities in the infra space, and if there are, which ones are those, what is the upside, potential upside, and are there any bets that one may want to avoid considering, well, perhaps their debt situation or what have you. But Nikki, why don't you just give us an intro and then you can take on the conversation from there.
Sure. So road construction, mid-sized construction companies have done extremely well, more so with the road constructions. If you've seen, it's a good 13 to 130% kind of jump that we're looking. That's the range that we're looking for these road construction companies. If you look at the order book to sales ratio, that's a healthy number that we're looking at for the select a few companies that will come on your screen right now. And also, if you look at the LTM, that's the last 12-month return of the companies, they're quite healthy. But then the only concern that I have right now, Agam, is the return potential that the Bloomberg consensus now offers for these companies. It's almost a negative potential that we're looking at for this company. And on this note, I'd like to bring in our guest, Rohit Natarajan, who is the research analyst in IDBI Capital. I'd like to understand first from you, Rohit, that the balance sheet, at this point of time, the order book to a sales ratio for most of these infra companies look to be more skewed towards your order book ratio. I'd like to understand what kind of appetite do these companies have in terms of their balance sheet to further take more orders here on, or we're just looking at the peak of these orders?
See, it depends upon if you're talking about a conventional ENC company who is engaged in road, he can on his own do a book bill ratio of 3.5 to 4x. But let me also tell you that there is a subcontracting element involved in it. So the subcontractor, let's assume if a particular company, ENC company, resorts more to subcontracting, they can scale up the revenues. But yes, of course, it comes with a cost. That is, your EBITDA margin could take a beat. But then again, it's all about how much ROC that you would make for that incremental venture that you are talking about. So it all depends upon what kind of a business model that you want to structure, how much subcontracting do you want to do, how much own contracting that you want to do. So it is a mix of too many factors and too many variables.
All right, Rohit, order inflows at now, though they are at the healthy levels that we see, but they have come off from their peak. And as NHI has also lowered the ordering in road sector, do you see that as a concern?
So we have witnessed that NHI has been missing its own targets for the last 2 or 3 years. Every time you see the budget announcement making big announcements like 10,000 odd kilometers will be awarded in this fiscal, but it eventually turns out that it could be maybe 5,000, 6,000 of that kind of amount. But yes, these concerns do linger on because on one side we have the country's minister talking about a target of 42 kind of odd kilometers construction of NHI per day in the next fiscal. But on the other hand, you don't have the kind of awarding that is matching up to that rhetoric. So this is clearly a concern. But let us assume that for the Bharatmala project, for whatever detailed project report that is already going on, there is a good amount of number that you can expect in FY19. So probably those are the numbers where the government is working on. And to a large extent, in fact, if you see the ENC space, the stocks have rallied in anticipation that these orders would be translating in somewhere down the line.
Rohit, I just wanted to understand, since you mentioned about the Bharatmala project, which are the listed players according to you which will benefit the most from this project?
So let's understand this from the Bharatmala projects could come in either form. That is, it could come from a hybrid annuity model. It could go in form of an ENC, conventional cash contract model, or it could even go for a BOT model. But the trends that we have seen so far, it is more towards ENC and hybrid annuity model. And even within these two models, we prefer ENC. Now, if I have to pick a few players in ENC, I would choose among the listed players companies like KNR, Dilip Buildcon, and Gayatri Projects to a large extent. Whereas if I have to purely go for a hybrid annuity model, that is where you will have Sadbhav, you will have Ashoka Buildcon, you will have IRB coming into fray. But again, from the return ratios perspective, I like asset light ENC over hybrid annuity model.
All right, Rohit, I want to understand a little bit. It's a stereotypical question that I'd ask. How confident or you think NHAI would be able to achieve its kind of, order, kind of a target that it has set out, given that it has already revised its FY18 road award project target to 6,000 from 6,500 kilometers to 10,000 kilometers. Do you think that would be a miss for this financial year too?
So yes, of course, there is always a slip between a cup and a lip. You would find that the numbers, the headline numbers could probably miss. It could be maybe 8,000, 7,000, somewhere on that range. But let's understand one thing. These projects are lumpy. The lumpiness of these projects could maybe spill over to the first quarter of the next fiscal. So that should not be a decisive trend. So the project lumpiness is what drives this miss. Plus, on one side, we are seeing an improving trend in the construction activity. I think that is a good thing to measure because once your construction activity picks up, then there is another confidence that further roads could be awarded. And in fact, there is a raft of legislations that is coming in benefit of the cash contractors. So there are measures. So even if, let's assume, the awarding of projects is missed, we are hopeful of a very good J-curve kind of a revival in the next fiscal.
Okay, Rohit, I did want to address some of the companies which stand to have a higher risk as of now, and that those which you would ask your clients to avoid. So which companies would there be and why?
So asset heavy models, they have been talking about, we are planning to monetize the assets, but they haven't made any progress so far. So I wouldn't want to specifically name some of those companies because some of these companies who have typically heavier BOT exposure, they haven't been doing in terms of return ratios. Whereas ENC space, contracting, asset light nature model, they have been doing exceptionally well return on equity. So let me give you with a case study. Dilip Buildcon is one example. When it came for an IPO, they had a mix of both asset heavy and ENC. But over the period of time, the company made it very clear that, look, we will be focusing more on ENC. And they had a very classical textbook example of how a good spin-off happens. And they did that, and the stock has actually performed 4-5x kind of returns within 1 year. So this is a textbook example that others should try to emulate. So there are companies who are talking this narrative for some time, but they haven't made any progress. So case in point, GMR, JVK, they haven't made any progress, but let's assume that they can sell off some of the road projects. This includes even Ashoka Buildcon, so ITNL. IRB has been doing it in form of InvIT. So there are talks that L&T could probably move to InvIT and take off the IDPL. So there are ways and means to look at this sector. It depends upon the comfort on management that you want to take a call.
All right, Rohit, I think we'll leave it at that. Thank you so much for your time.
Well, that's about the infra and the realty space, and the Nifty Realty Index is more than doubled in 2017, and all the constituents besides HTIL, I guess, has given you negative returns. So Indiabulls Real Estate up over 200%, Soba, Godrej Properties, all have actually more than doubled for the year. Let's see if going into 2018, if these sort of returns can be replicated or not. But that also depends a lot on, we've got elections coming up. There are a lot of state elections in 2018. Then you have the general elections in 2019, whether that puts any
I'm actually looking at the return potentials, that the list that Nikki's put up right now, and well, the return potential for most of these companies that are on Nikki's list, they have a negative return potential, and this, well, something like a Dilip Bilcoin, fine, okay, absolutely flat right now, but HCC is the only company with a 23% upside from current market levels. You have KNR Construction, Gayatri Projects, Sadbhav Engineering, NCC, and HCC for that matter, or beg your pardon, PNC Infra for that matter, all looking at a decline from current market levels. So, well, there will always be a certain, but at one point in time, it's always going to be about the outlook, isn't it, Nikki? Because how much can you depend on the upside of a certain stock?
Yeah, completely. After giving like 100% returns for the financial year, we're looking at a negative returns for all of these companies. There has to be like either the order book of these companies or the orders have been at their peak, and
which are not, which you said, right? They've actually been going down from NHAI at least.
Yeah, so NHI, there has been a potential problem, but then overall they seem to be, they have peaked, and there could be no further run up to the order book thereon. That's probably one of the reasons that we could be looking at and trying to understand why the return potential of these particular companies are negative for that matter.
Okay, that's about the realty space, but let's move on to our next trend, and that's on Welspun Corp, I guess. The company has won an order. In fact, the news came about yesterday where Welspun Corp backed an order for a supply of 1.24 lakh metric ton pipes, pushing the value of the total order book to almost 7,400 crore rupees. Well, how will this help the company's financials, and what does the road ahead for the company look like? To answer all of this and to discuss the growth outlook for the company, joining us now is the MD and CEO, Vipul Mathur. And Nikki, over to you.
The first question I have for Vipul, so when can we expect these orders to start reflecting in your book of accounts? And also with this current order, how much does your order book currently stand at?
With this new announcement of this 124,000 tons of order, our current order book stands around 1.2 million tons. And in terms of value, it is around 7,400 crore rupees. Now, as regards when we would see that, we would see execution of these orders starting in the fourth quarter, almost flowing into at least 3 quarters of the next year.
All right, could you also help us understand a geographical breakup of your current order book?
If you see, out of this 1.2 million tons of an order book, almost 475,000, or let's say 500,000 ton of order book is out of India. Almost 500,000 ton of order book is out of our plant in Saudi Arabia. And at this point of time, almost 200,000 tons of order book is out of America. So that's how the order book stands at this point of time of 1.2 million.
All right, Mr. Mathur, I'd also like to understand if you have set any targets for the financial year in terms of your order book and how much of that has already been achieved by the company.
So if you see, we still have 1 more quarter to go at this point of time, and we are pursuing some very interesting leads and opportunities all over, and we are fairly hopeful to wrap up some significant amount of orders in the next 2 or 3 months, in the next quarter.
Any ballpark figure that we could work with in terms of your if the order book for the remaining for the remaining part of the financial year?
See, it's difficult to set a target, but at this point of time, we have bidded some large projects and which are in very active stage of discussions and finalization across all the geographies. So it would be, Nikki, it would be a little difficult for me to put a number across, but I can tell you for sure that these would be significantly large quantities of business what we are contemplating at this point of time. And as and when we keep on receiving it, we will keep on notifying to you, please.
All right, so we leave it at that. Thanks for joining us and giving us an update on Welspun Corp. But with that, I'd like to thank Nikki as well for joining us and taking us through the show with all the sectors. And of course, we'll be watching out for a lot more trends, but we're completely out of time. So that's a wrap on this edition of Trend Spotting. Up next is Hot Money, so stay tuned in a Bloomberg Minute.